Day 67 of the daily dollar cost average for Bitcoin. And again, I'll just get right into it. Do the conversion from DAI, the stablecoin, over to Bitcoin for the amount of $333. And as you saw in, you know, the other day, there was a big correction in Bitcoin, and it lasted for a very short period of time. It was right here. Bitcoin went down to as low as $64,000, but for very short period of time. And a lot of people are starting to digest as to exactly why it happened. I can't tell you why it happened myself off the top of my head, but we'll look at what other people are saying. So it's saying here that, like with altcoin daily, is saying crypto holders, it's a trap. Bitcoin and altcoins crashing due to manipulation. Cryptos R Us is saying Bitcoin flash crash cause found, and he's not 100% sure, but Bitcoin something crazy happened. There's a lot of people talking about this. This Bitboy crypto urgent Bitcoin warning for worst reasons Bitcoin dumped. There's everyone's kind of analyzing why it happened. Again, I personally don't know off the top of my head, but there's all kinds of theories and whatnot going on. I'm sure some of it's real. Okay, I'm just trying to look here, see which one would be interesting. Yeah, people, excuse me, are talking about Ethereum. This Ethereum dip will change lives. Target hit. Yeah, so Michael Saylor saying, I guess, the real importance of Bitcoin and Ethereum. Michael Saylor saying, like, Ethereum will crush Bitcoin. Um, it's just all this stuff that's going on, right? When to sell Bitcoin. Yeah, so I don't know which one would be the best one to watch right now because is I don't know. I wouldn't mind watching this one about Ethereum. This guy, we'll just watch this. We've never seen this guy because again, if you watch Michael Saylor, he's just going to say buy Bitcoin. So we'll listen to this kid, see what he has to say.
Well, YouTube, welcome back to Noti Crypto. This is a quick Ethereum update. Is this a mega crash coming, or is this just normal Ethereum stuff? Well, look at this chart, guys, okay? You see this chart? Look at the last video we made. It was all the way up here, and I made a realistic Ethereum price prediction. Look at our only level of support. 1958. That was our only level of support. In our heads, like, this was not enough support for me, guys. This was my only level of support. Here we are in 1958, hit it right on the dot. It was our golden support. Everything was red. This was gold. And here's our dump, and we went right to the golden zone. Does that mean we're immediately, off to the races now? No. But this was the next buying area, which is awesome to see. Got a sniper entry there, as always. So that is really good to see here. And it looks like we're just retesting this area, guys. Same thing we did here. We took off this huge bull run, came back down, had a crazy run up, came back, tested the area, took off again to this point, right? And if we do the numbers, this was about a 31% drop, right? After a 45% raise. And if we just go from this zone, imagining that this was our support, 30% raise to a 22% drop, if you calculate it like that, right? So less significant, but it's still healthy. We just came up, broke out, did our retest, came up here, set a higher high, set a higher high, broke out from this resistance. Now we came back, retested it, might chop around here, maybe come down to here for a little bit just to shake out weak hands and then take off. That's how I'm seeing this going. I think this is just another situation of shaking people out, and it's so funny that they literally come back down and test that support. So this to me is more confirmation of the bull run. This is actually making me more bullish because they're basically coming up. We're breaking this huge resistance barrier that's been established. Mind you guys, you got to think about this. It's been established for 57 days. So we're breaking this huge resistance barrier. You know, we did make a little bit of a retest, and you know, lots of people have made gains up here. So they're like, okay, let's shake out the weak hands. We test that mark, make sure it's what we want to do, make sure we want to be bought up, and here we go, off to the races after that. You know, no financial advice on this channel, never been financial advice. Always do your own research, but I'm looking at this like this is exactly what's going on. The same situation here, breakout, retest. You know, breakout, retest. Simple. So here we go, guys. Whoever watched the last video, I think almost 4,000 people have seen this so far, which is awesome. Let me like my own video because the information is awesome. You know, 1958, that was our next support, you know. So obviously this video is not a current ETH breakdown. Make sure to check it out. It's basically me talking about why I think we could see, you know, a very big Ethereum price jump this year. Okay, so.
Okay, and so what this guy is saying, this is, again, this gets into, I wouldn't say high level technical analysis, but this is it's definitely you know, he's looking at it from a technical analysis point of view. He's not looking at it obviously from like emotional or anything like that. And this is the way a TA should be talking. It is just look, you know, he's looking at it from, okay, the resistance has now become the new support, and it when there's a huge crash like what just happened, I wouldn't say huge crash, but it was significant, right? The support, it didn't even break the support line. So this is the way he's looking at it. He's looking at it from a very, you know, objective point of view, and it makes sense. But then, you know, you run into the risk of, you know, you read into the tea leaves what you want sort of thing too. You know, I think it's going to have to test the support line a few more times, and this will be like this. What's happening is this is going to be the new support line. The old resistance line becomes the new support line. That's basically what technical analysis is all about, right? And like he said, it's basically getting rid of the, you know, the weak hands, the people who don't understand technical analysis, the people who are emotionally driven. That's who it gets out. Now, is that true or not? You know, that remains to be seen. But I can see it. I can see his point of view because you can see here couldn't crack this resistance line, right? Now it's bouncing on the resistance line as the new support line, and that's the way technical analysis works, right? And anyways, like it broke out here. And then that's usually what it does. It'll break out and it'll do a huge breakout, then it'll come back down. But then it'll test it if this tests this line a few more times, that'll become the new resistance line, or the new support line. Sorry, that'll become the new support line. Then it'll have a new resistance line up here somewhere, right? But anyways, that's essentially what technical analysis is all about. And you got to be able to read it, right? And just some people are better at it than others, and, you know, whatever. But again, it comes down to objectivity. It comes down to looking at things, you know, without any emotion. And that's basically what he's doing. So if we look at, Ethereum, so Ethereum's at 2,800, right? You know, yeah, it went as high as almost 3,200, like 3,186, and it went down to, like you said, 25. He was talking, I think he was talking American, but it's 25 was the low. So again, it's whatever, you know, like it's on its way up again to, 28.13 and so on and so forth. So they're just saying it could go up, significantly since this point. And I think so. Actually, I wouldn't mind watching Michael Saylor about Ethereum. We'll just see this video here.
Hi, class.
Hear what he has to say.
Google and Amazon and Facebook are growing 25%. They're beating the hurdle rate.
Yeah.
The hurdle rate you have to beat is the cost of capital, is the expansion of the M2 money supply. And so they're beating it. That's working. There's a nuisance. I'm not really paying attention. What happened was 2020, when everything came to a grinding halt, and the gravy train ends, like the bond train ends when interest rates get to zero. Big tech becomes a crowded trade, and in like a matter of weeks, you realize that it's now, the P to E of Apple doubles, even though the revenue's flat, even though the earnings are flat. And when I was invested in something that everybody else disagreed with, when 99% of the world disagreed with it, I was confident that was going to work. And as long as there's a debate, like, I'm tweeting Apple's going to take over the world and everybody's disagreeing with me and they're telling me to buy HP and IBM, then I'm comfortable. When we got to 2020, everything flipped and everybody agreed, and 20-year-old Uber drivers were buying Apple and Amazon. And my niece, who was like in junior high, she's buying Apple stock when it's going up by a factor of 20.
Yeah.
And I'm like, okay, I have to get out now. This world has changed, right? And so what happened was I lost faith in the monetary currency and the monetary policy in Europe and the US this year.
Yeah.
And I lost faith in the big tech trade this year. And it's not hard, right? I mean, the M2 money supply expands by 24%. If the money supply is expanding by 2, 3, 4x what it was, at some point you notice. It's like, if I turn down the temperature by 3 degrees every year, you might not notice. But if I crank it down by 20 degrees or 25 degrees, you notice. So I would say my worldview inverted. And what I realized was, all the big tech companies were now monopolies, and they were at the end of a 10-year run. And they weren't going to be a good store of value. Bonds to store value have to yield more than the expansion of the monetary supply if they're risk-free, right? The risk-free interest rate is the M2 monetary supply expansion if you wish to acquire scarce assets in the future with your money. And otherwise, if you're concerned about wealth preservation, your inflation rate isn't 1 or 2%. It isn't the consumer inflation rate. It's the inflation rate of a basket of scarce assets that you desire. That basket looks like it's expanding or inflating at 15, 20%, and we can debate what it is. But when that happened, then I realized that bonds aren't going to hold value because their yield is not greater than that monetary supply expansion. Equities have to grow faster than the rate of monetary expansion. So maybe you can grow cash flow 6% a year, and if you're growing 20% a year, you're good. If you're growing 6% a year in the last decade, then you leverage up. So you borrow debt, you short the dollar, you buy back half your shares, and your 6% looks like 12% EPS, and then it starts to work. At the point that you can't leverage up anymore, and at the point that the hurdle rate triples, it becomes pretty clear that nearly all the bonds won't hold value. Most real estate's not going to hold value, and most equity isn't going to be a store of value
Who's the boss? I'm the boss.
either, because the hurdle rate tripled. So now you have to run around looking for a scarce asset, a scarce desirable asset. And you can't buy a liquid portfolio of Picassos or Van Goghs, as far as I know, at a fair price. And in theory, liquid or scarce real estate, beachfront property that every other wealthy person wants, it might hold value, but how are you going to buy that in a liquid portfolio at a fair price? And so it leads you to look at precious metals. And the problem with precious metals is, you can create derivatives, and so you can print more financially, and then you can also mine more. And then it's very difficult to verify how much there is. And so they're not a hard precious asset in the way that a crypto might be. So that leads you to crypto. And after you sort through 6,500 cryptos, the conclusion is Bitcoin is the dominant crypto asset network. And it's 50 times bigger than the next thing that looks like it. And so my conclusion became Bitcoin is the monetary network, like Facebook was the social network, except the monetary network's worth 100 times as much as a social network. And if Facebook's worth $1 trillion, I'm the guy that bought 500,000 shares of Facebook at $12 a share before it went public. And then I bought another 400,000 shares at $38 a share. And then I watched it go to 280. So I understand Facebook, and Facebook was a phenomenon that was inconceivable before they created it. There wasn't any competitor to it. They collected and channeled social energy of 1 billion people, and then 2 billion people, and maybe 3 billion people now. And they monetized it with advertising, and it became a dominant juggernaut. Well, I look at Bitcoin and I think, what if you had Facebook for money? What if it was Facebook for billionaires? What happens when 10 billionaires put $1 billion each on the Bitcoin network? What happens when thousands of millionaires put $1 million each on the Bitcoin network? And that's worth 100 times what Facebook was. And of course, what did I need to do? I needed to conclude that it was 50 times stronger than the next best thing, and
what the hell happened?
It was an accident.
You can look at Bitcoin Cash and Bitcoin Satoshi Vision, and they're similar, but they're 50x smaller. And then I needed to work through the Ethereum thing, and my conclusion with Ethereum is it's not a treasury network because they're going to convert from proof of work to proof of stake. And until they've run $100 billion on a proof of stake network for 5 years, you can't reasonably trust it with your treasury assets.
Lindy
it's more like it's like a unicorn.
Yeah.
Right? It's something, but it's not a treasury reserve network if you want to store a value. Once I got past that and I saw Bitcoin was 200 billion, it's game over, right? But by the way, and the last icing on the cake is 99% of the world disagreeing with me.
Exactly. Contrarian investor. That's what I'm doing. What I also recommend in my books, in my consulting, you always have to bet against the mainstream, against the big mass, do always invest contrarian. If the whole world thinks Bitcoin is it, then sell your Bitcoin. But there's one question I have, Michael, because you made a lot of money with domains, with web domains. So you already understood back in the days the scarcity of digital assets. So why didn't made it click in your head when you learned about Bitcoin in 2010 or 12?
It's because if you're making, your brain has got this much bandwidth, and there's a lot of smart people in the world, right? The world's full of people that don't understand Bitcoin, but they're smart, right? They're not stupid. They're ignorant, right? They're uninformed, and they don't understand it, and they haven't taken the time to understand it. So I don't think I was stupid. I was smart enough to start a company, smart enough to buy up Hope.com and Angel.com and Alarm.com and Voice.com and Strategy and the like. And I was smart enough to make $500 million investing in FANG stocks. But if all those things are working, and if you're preoccupied by running your business and everything's working, and if you're, by the way, and you're Apple was a pretty good idea in 2012. You could have bought Amazon at $300 a share, 2013.
Change. To make the most of it, you need an edge. Go.
2012, it was going to go up by a factor of 10. I was already in love with something else. right?
Okay. Preoccupied.
Apple was going to go up by a factor of 20. Amazon was going to go up by a factor of 15 or 20. Google and Twitter and Facebook, these were all going to go up by a factor of 20. I had my thing, and then Bitcoin was a nuisance. It was a noise. By the way, Bitcoin was at a different stage too, right? The risk reward is different. There are 100x as much risk, and there was a 10,000x as much return, right? If you had bought it, in 2013, you would have gotten a monster return, but you had to get through the fork wars. You had to get through the Mt. Gox, failure. You had to get through the question of, will the IRS legitimize it? Will the SEC legitimize it? Will the OCC legitimize it? Will Congress legitimize it? Will the Senate legitimize it? Will institutional investors legitimize it? Will the cowboy exchanges with 125x leverage blow it up? And these are all challenges to Bitcoin that it overcame between 2012 and 2020. So my view is buying it at 10,000 was a lot less risky and a lot more obvious than buying it in 2012. But maybe more to the point, I had a motive in 2020, right? I had a problem to solve. And one problem personally was the big tech trade was crowded, right? Nobody thinks that Apple and Amazon would go up by a factor of 10 or 20 from here, right? And the corporate problem was I had 500 million in cash, and it was looking like it was going to lose 15% of its purchasing power a year. And so I'm going to lose 50 to 75% of the cash value, right? And the outside shareholders didn't appreciate the cash. They literally told me, we don't give you any value for the cash. So I had a corporate problem. I had a melting ice cube liability. Personally, I became disenchanted, with the world. And the world turned upside down. So now I had to reassess all my premises, and I had to open my mind. And that led me to the Bitcoin standard. And that led me to macroeconomics. And that led me to a hard assessment of the impact of monetary expansion everywhere in the world on the value of assets. And that led me to conclude that inflation is not 0%. Inflation is a vector. And the inflation rate of a market basket of scarce assets is running 15, 20%, not 1%. And if your goal is to invest so that you can purchase streaming YouTube and Netflix videos, it's not that hard. But if your goal is to invest to buy precious things that people want, i.e. wealth preservation, you're going to have to change your strategy. And so that's how
Okay, that's actually pretty interesting. I thought he was going to be talking about, Ethereum. Like he kind of, I wouldn't say badmouth Ethereum, but the way this thing was positioned, it sounded like he was going to be talking up Ethereum. He was just saying Ethereum has to prove itself, but Ethereum, might be the next thing. Okay, actually, I wouldn't mind watching this one. Ethereum's going to hit 100 grand, but
a lot of people don't know this, but the best way to make money with Amazon in 2021 is not by selling.
Okay, so we'll watch this one about Ethereum, but getting back to what Michael Saylor was saying, like about the whole tech thing is so true. The stock market's crowded out. People were just buying things for no other reason than there was nothing else to buy. It's the crowding out effect. So people were just buying, Amazon, the big names, because where else were you going to put your money? The money supply was increasing so much that your money was becoming worthless. So you had to find somewhere. It's like those stocks went up by default, and it didn't matter what you put your money in, as long as you didn't leave it in cash, and those were the best things. But those things were really, they're overdone. Their time is like Google is, as far as I'm concerned, is on its last legs. Like that thing is pretty much done. You're going to hear of Google, something serious will happen to it in the next, couple of years, because like they're at capacity as far as running the system. Like they're so starved for energy. They're probably the biggest energy hogs in the world. and they just can't run it anymore. And blockchain will take over. There's a good book. It's called Life After Google. Explains the whole thing. Like those tech companies are pretty much done, I think. But anyways, so watch this Tyler Winklevoss, how much is Ethereum worth? We'll watch this video. This might be, a longer video than normal, but anyways, yeah, we'll just hear what he has to say.
I think it's very high. In some ways, I haven't done like math on that lately. So for disclosure, and we've talked about this before, that we have material stake in Ether as well. Like you mentioned earlier, the media loves Bitcoin because it's easier for consumers or readers to understand that, and they harp on that, and that makes sense. But what's less talked about and less known is that we are huge fans of Ether, or Ethereans, if you will, in the slang. So, look, I think Ether has tremendous capabilities because Bitcoin's digital gold, right? It's sort of moving value from A to B, and there doesn't seem to be a huge appetite in the community to experiment or sort of screw it up, right? It's like, we've got a good thing going. Let's not run too fast. Let's not be too exotic. Whereas Ethereum is like it's a decentralized operating system. So the promise is that you can create these applications on top of it, permissionless. The same way you could build an application, I don't know about anymore, but back in the day, you could build a company on top of Facebook. So companies like Zynga, which actually IPO'd and was worth, I think, at least $1 billion, was a company built on top of Facebook. So most companies today are built on top of a cloud computing service like Amazon. So you rent space from Jeff Bezos and Amazon. Ethereum is a decentralized Amazon where you can build your applications there and you run the computing power by owning Ether. Instead of running your credit card through Amazon Cloud, AWS Web Services, you just pay the network in Ether.
Tyler Winklevoss of the Winklevoss twins, who you may know from the social network, gives his Ethereum price prediction and shows how he gets his Ethereum valuation. Also, only a tiny percentage of people who watch my videos are actually subscribed. If you enjoy the video, consider subscribing. It's free and you can always change your mind. Enjoy the video. To watch the full interview, check out the first channel in the description from a great podcast ran by Casey Adams. To understand Tyler's full Ethereum valuation, he first explains how he values Bitcoin. Stick around to the end to see his Ethereum prediction and how he gets there.
So I think it's just more time and education and more data points, but how I get to 500,000, it's very simple math. The market cap of gold is 9 trillion. So the entire supply of gold is priced at 9 trillion. If Bitcoin is gold 2.0 and it disrupts gold, then its market cap also has to be 9 trillion. But today, Bitcoin's market cap is 330 billion. So it's got to increase somewhere like 25 to 30x from here. Yep. So put on a 25 to 30x multiple on the price of a Bitcoin today, which is, let's say, 18,000, 20,000. That easily gets you to $500,000 of Bitcoin. So if we're right that Bitcoin is better than gold, and the way we get to that is we look at the characteristics of why people find gold valuable. It's scarce, it's portable, it's divisible. Bitcoin's better than scarce, it's fixed. You can send it like email. You can divide a Bitcoin into 100 million pieces. So across the board, all of the reasons why humanity has found gold valuable for the last multi-millennia, Bitcoin beats it. So it should be worth as much or more than gold. And for that to happen, a Bitcoin has to be worth $500,000 a Bitcoin.
That's, I totally makes sense. When it does reach the point when it gets to $500,000 a coin, like what does it look like from the consumer behavior? Are people spending it? And how do you think it will be used when it gets to that point?
So that is a great question. A lot of people wonder, do you have to buy things, spend Bitcoin? Does it have to be used as a currency for it to get there? My answer is no. Nobody buys coffee or goes to McDonald's and buys a Big Mac with gold. Gold is seen,
Store of value.
Yeah, it's a store of value. You got it. But one day, a long time ago, before the invention of fiat currency, gold was brought to the market, and it was a commodity money, but we recognize it's a better store of value. So if Bitcoin just becomes a mature, better store of value, I think we see 500,000 a Bitcoin. If it's also used as a currency, there's efforts like the Lightning Network and other sidechain projects. If you can also use Bitcoin as a currency, the value actually goes up much higher. If it can be both a store of value and a way for a currency to work on the network. There are other instances too where Bitcoin itself, the network, could be like the substrate of other networks, and just the
Supposed to make the stock
security of it, it would basically become like the digital global reserve currency of all crypto. Then it's even higher. So when I say $500,000 of Bitcoin, that's actually the conservative case. It could easily be a couple times more, or even order of magnitude more. And by the time it gets there, like, you're never selling your Bitcoin. If you need to like use fiat, or I sort of say cash is trash, you'll just be able to borrow. And today you can borrow off your Bitcoin, get the cash, spend it without selling the Bitcoin. So I was listening to this podcast, and they were joking about like this Bitcoin meme of the Matrix, and like, when Bitcoin gets to like 1 million, like, you won't have to sell it, kind of thing. Morpheus and Neo, like Neo's like, what happens when it gets to 1 million? It's like, you won't have to sell it. So anyway, I think we've been hodlers, that's the term for holding, since 2012. And I was on CNBC Squawk yesterday morning, and the interviewer asked me, Seema Moody, she's like, what have you been doing to prepare, like, now that Bitcoin's at 18,000? I'm like, I've just been hodling. Like, it's just being patient. And I'm gonna hodl all the way to 500,000, and I'm gonna still hodl, because if I need US dollar shitcoin, I can always find another way to find it. But like, Bitcoin it's like a multi-generational asset. We are at the dawn of something as significant as the internet itself. The problem with the internet is that you couldn't buy a piece of it. You could buy like a domain name, you could sort of squat, you could get like, I don't know, cool.com or podcast.com, even though podcasts weren't a thing back then, but if you knew that they were.
Funny you say that. I was literally looking up podcast.com yesterday, and it was going for like $1 million. So funny you bring that up.
Right. But that's like owning a piece of the internet, but it was kind of hard. You had to invest on the application layer, the companies on top of it. But wouldn't it have been nice to just buy a coin that represented the internet?
Totally.
Well, fast forward to 2010, the invention of Bitcoin, you can literally buy a coin, a Bitcoin or a fraction of one, that indexes or canvases the entire Bitcoin ecosystem without having to pick what company is going to work, whether it's going to be Gemini or Coinbase, or, it's sort of like owning a piece of the racetrack without having to bet on which horse is going to win. As long as the races are running, you make some money. And so Ether is the same thing for indexing a piece of the Ethereum network, which is a digital or decentralized global computer. A lot of people equate Ether to digital oil. So if you want to get into the crypto game, my suggestion is own some Bitcoin, digital gold, and own some Ether, digital oil. And with those, you have most of your bases covered.
Okay, that's really interesting about Ethereum. Bitcoin's digital gold and Ethereum digital oil. That is an amazing way of looking at it. And I think I'm going to buy some Ether. But it's true. Like, you you're getting a piece. Like, it's so true. Like, you couldn't really get a piece of the internet unless you were like an Amazon.com, and how many people could run something like that. So anyways, yeah, it just reinforces what I think most people already think. Most people listening, which is hardly anybody, but I think what it is Bitcoin has a long way to go. I think Ethereum has a long way to go, but yeah, we'll just keep rolling with it and try to reap the rewards. But again, keep your head screwed on. Don't take the downturns. Don't get emotional when that happens. But anyways, just try to stay in the game and try to just move forward without getting without getting emotional. That's basically what it is. So that's it for today, and I'll talk to you tomorrow. Take care.